Hi everyone, this is a technical analysis on USDCAD. Let's start with some fundamental background first. Last week, the Federal Reserve decided to pause its tightening cycle, maintaining interest rates at a range of 5.25%. The FOMC is awaiting further economic data before determining whether to implement another rate increase. Their aim is to carefully adjust their policy, aiming for a sufficiently restricted level that can reduce inflation without causing significant economic hardship. In contrast, the Bank of Canada surprised the markets by raising interest rates. This decision stems from their dissatisfaction with the disinflationary trend observed during the first quarter of 2023. The BOC deemed it appropriate to increase the interest rate to address this concern. This divergence in monetary policies had a positive impact on the Canadian dollar and resulted in the breakout of the key support level at 132. Now, on the daily chart, we can see that USD CAD is trading below the key 132.25 support, and it's now pulling back in what could be a classic break and retest trade. In fact, we are likely to find sellers here leaning on that 132.25 resistance, but we'll also find the blue 8 moving average for confluence. On the downside, the target should be the 130 level. The buyers, on the other hand, will need to break above this resistance at 132.25 level to start getting some conviction for more upside and target the 134 handle. On the 4-hour chart, we can see that the whole move lower since the 134 level has been diverging with the MACD. This is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, the pullback should end at the downward trend line here, where there's also the previously mentioned 132.25 resistance and the daily 8 moving average. If the sellers fail at this resistance zone and the price breaks out, the buyers are likely to pile in with more conviction and target the 134 level. On the 1-hour chart, we can see that for further confluence, we also have the 61.8% Fibonacci retracement level at this resistance. This zone will be a make it or break it moment for the sellers, as a move above the trend line would invalidate the bearish setup and lead to a squeeze higher. Today we will see the US PMIs, and it's likely that higher than expected data leads to some US dollar strength as the market will price in more hikes, and lower than expected data lead to more weakness in the USD as the market would price out the July hike.